Hi, Matt. Can you hear me? We can hear you.
You can hear me?
Yeah, I can
Yes,
hear
loud
you.
and clear.
Perfect. Okay, so can you see my screen?
Not yet. You have to go to the green share box.
You
Oh,
have
yeah,
to,
right down there. Okay, blah, blah, blah. Where is it? Here, here,
Blah de blah.
blah, blah, blah. Where did it go? Okay, share box. There we go. And screen share. How about now?
Beautiful. We're
Okay,
good. We're good with pink and blue, or
cool.
maybe it's fuchsia.
All right.
All
So,
right.
yeah, put together a few things for you this morning, and I
Hey,
guess
you
we'll
know, I
just.
want to thank you on this holiday week for showing up and sharing some things with us, Matt, off the bat. Okay.
Oh, yeah, for sure. Thank you for having me back again.
I look forward to your interviews. I learn from you every time. So I'm interested with what you're saying here on this green box. Looks like you're considering potential correction close to these levels.
So what we're looking at here is more just a long-term broad view.
I'd say so.
Yeah, exactly, right?
Yeah.
And the general view here is multi-years of consolidation followed by a strong secular bull market. And if we look at the increases that we've seen in the past, that where we're at right now seems like it has more room to go, historically speaking.
Sorry to interrupt. Is there a chance you can lower a little bit your microphone or pull it a little bit further away?
Sure. How about?
Can you lower your audio, Steve?
Yeah.
No, I said it also because it distorts his voice a little bit.
Oh, okay.
Too loud.
Oh, is it too loud? Okay, so meeting controls.
I hear him clear. Tell you, having a producer on my show, I don't know. I have to reassess this.
Maybe I'll just step back. Where's the?
You're good. Just go ahead.
Okay. Oh wait, here, there it is. I can do this. Okay, I'll do that. Okay, so what we're gonna take a look at today is just kind of like the general market to get a risk on, risk
off. A little
off.
bit louder now.
Now it's louder. Now you need louder. Come on, you guys.
A little bit louder, and you'll be perfect.
Okay, so let's go halfway.
Steve's a technical analyst.
Analyst.
Now you're perfect.
All right. All right. Thanks. Okay. Thanks, Steve.
So I don't know if you guys just see this part of the chart or screen or all the way across the top. So we're going to take a look at the general macro, a couple things to look at: gold, cannabis stocks, a currency pair, and then crypto to end off the 30 minutes here. So the general view that I'm looking at is what is going on in the market. So the reason you had me on kind of originally was crypto stuff, and even though I do crypto stuff, Wyckoff and Livermore kind of charts are my thing as well too. But the general view for crypto is, a lot of people say it's an uncorrelated asset, but I kind of tend to disagree. I think that there's a lot of correlation between the general macro being risk on and that being good for Bitcoin. I don't know. I think the same kind of goes, if you look at charts, kind of has said the same for gold in the past too. So even though gold might have been a hedge in bad times, when the bad times first start, you see almost everything sell off, because if people are losing, if money managers are losing money, they've got to take money from where they have made profit to cover their losses, kind of thing. And then gold or, whatever risk of hedging bounces, before the market does. So I think the same kind of thing is kind of where Bitcoin lies in the whole thing. So which is why I start with this, because it looks like the general macro view is that we continue to be in a bull market. An interesting chart that I came up with last year was this look on General Electric. And the basic thing that you're seeing right here is that recessions are in the yellow boxes, and we're seeing general declines from highs in these pink boxes, and then sideways on the monthly chart in the blue boxes. So what you see here is the downtrend here, the downtrend here, the downtrend here, and here have both been met with recessions. Whereas this downtrend here, the 1987 correction, didn't see a recession until afterwards, and then a resumption of the bull market. And you can see here the sell-off, the sideways portion right in here, and these sideways portions here, 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 and here have all been met with an RSI dipping into oversold, and then as it leaves and gets back to oversold, a resumption of trend. So what we've seen here is this huge sell-off in GE. Part of that you could say is fundamentals of the company, but the same thing has happened where we've had a bit of base here sideways, and we have broken above that 1050 level with oversold. So that harkens back to this 1987 theory that I've been kind of chirping away on since 2017, which is that, you know, the market is good. What Trump is doing is trying to bring jobs and money back to America. Thus, you know, the pullback we're going to see is probably more 1987 style before an actual recession. And I believe that's what's happened, which to me sort of helps kind of confirm this bias of a continuing secular bull market. So, you know, if that all falls apart, that's fine. But I see these kind of things confirming each other. The last time we were on, you were also...
So even the things that were out of favor are starting to act good, and this could be part of a blow-off phase, Matt, when the junk is starting to come out of here, kind of like tertiary level stocks. Money's gravitating to things that did not work for years, and now they're starting to work and starting to not be as exuberant about, say, FANG.
Yeah, and I think, you know, even the talking heads on CNBC and things like that, and other chart people that I follow have been talking about I'm doing air quotes right now, a rotation to value stocks, you know, meaning that they're kind of, you know, feeling that, you know, that there's room to move for things that are undervalued or lower cap things or emerging markets and things like that. Okay. So, yeah, and the last time we were talking about gold, silver, and all that stuff because markets were much higher. And, you know, I was very much of the position that we were going to see some pullback around this resistance here, which we did. I think a lot of people were thinking, you know, let me grab this. We're thinking a small pullback and a resumption of trend because of the Fed and yada, yada, yada. Whereas I was more of the position that, where are we here, 2020. So I'm just going to draw a little line where the election would be. Down around here. So my positioning was that we've come up with this large run to resistance. You know, Trump may be who he is, but he's not going to try and drive things straight into the ground right until election day. If he's going to try and make any moves with trade deals, which is then going to see more buoyancy to the market, it's going to be, you know, in the months leading up into the election. So to me, what I was saying to you is it would make more sense to see a pullback, you know, and then things do well into the election. And then if there's more turmoil in the markets, you know, maybe towards the end of his next term, we could see gold continue up. So I'm not really the biggest fan of seeing gold go straight up to 17 when I'm seeing a secular bull market with some value stocks starting to respond, which is my position why I still think that gold seems like, you know, it should pull up before, you know, the next election cycle, which in itself would create a huge cup and handle, I believe.
Interesting view. So more of a, instead of big price decline, more sideways, just digesting. And your line in the sand would be the breakout over, say, 1380. That's where it really started to accelerate. 1360. See that double top in there?
Yeah, so we'll want to be seeing, here, here, and here as support come in over the next year, I guess, really, right?
Okay.
Yeah. So now what I was starting with here was basically, are we in a risk on environment or a risk off environment? And it seems like, you know, risk on with this. And, you know, the general trader, you know, is going to be looking at value in the beginning of this. And now we're seeing a rotation out into, you know, smaller caps. And if gold tends to fail here and consolidate, then we're back to this risk on view. So if we're risk on, there's two things I think we want to look at, which is cannabis stocks and crypto, which have both seen, you know, speculative, parabolic bull markets. You know what I mean?
Yeah, I think you brought this up last time that you were becoming constructive on cannabis.
Yeah,
you know,
exactly.
I've been constructive on cannabis since I was about, I don't know, 16.
Right?
Oh, how did you know? All right,
Smell
go
our
ahead,
own.
buddy.
Anyway.
That's my.
So something that was very noticeable on the charts, you know, is this just bull market,
Yeah.
straight up into, where are we? October. So right here, October 17th.
Yeah.
October 17th. October 17th. That was the October 17th right here was the day where cannabis was legalized nationwide in Canada. So we've seen this huge run up to the night of legalization, and everything's just been selling off ever since. The next important date was October 19th of this year. So my position that I believe I've talked about on your show and other shows and tweeted about a gazillion times is the run up into legalization, followed by what would be a speculative sell-off, you know, buy the rumor, sell the news. And then our first key date is this October that just passed, because what the Canadian government has done is taken all of the, we had a lot of illegal shops that were allowed to sell cannabis because the government just didn't bother. But what happened was when
in Canada or the U.S. because
in Canada, so there was
okay,
shops.
same thing's happening here.
Yeah, so there's shops everywhere. So now those shops were selling, you know, flowered product, meaning like dried bud that you can smoke, or edibles or THC oil and all those kind of things. But what they did coming into October of 2018 was make all of those shops shut down and make everyone reapply in this new legal framework. But they have only allowed a very small number of shops to open, and they have only allowed flowered products to be sold, and the government shops that have opened up in each province have been a very small amount. So if we go over to Twitter here, we're seeing that, you know, many companies are mad at the Canadian government, as I've been talking about, because they have been purposely suppressing the market. So in Ontario is Canada's biggest province and has been running a loss, same as New Brunswick and other provinces. So, you know, here we got the government of Ontario saying, you know, we have 24 shops and we can't understand why we're not making money. You know, it doesn't take a rocket scientist. So they're thinking about changing the plan and the way the applications are done, which would make it go to like 1,000 shops. So if we have this huge demand and no supply, or at least a lack of outlets, of course, everyone is going to be missing revenue. So more shops is extremely important, which comes to our next two dates here, October and December. So October of this year was the first time that any shop in Canada could apply for license to sell edibles. Now in December, after 60 days, the first shops will be able to start selling that product, which makes me think in 2020, in probably Q2, once people have been able to manufacture, process, and sell more edible products, that we should start seeing some consolidation in the market. So, you know, when you see companies like Aurora, which have a lot of assets and are a pretty good company, right back down here at support, you see Canopy Growth, or Weed, which is the bellwether. I mean, that could go down more, but it is also at an old high right here that it bounced off of. Tilray has come down to IPO levels. So those are the kind of things that if we look in, you know, the crypto people and the crypto sphere that I came from, when I see those kind of things on charts, back down to support, back down to old highs, back down to where other fundamental things happened, I think it's really worth taking a look at that sector again. And now that we know that, you know, people sold the news on October 18 And then we have this application for edibles happening right now, hopefully see revenue growth in 2020. Some things that have been absolutely battered, THC Biomed, this is in the same, near the same town that I live in. They're the only supplier of live plants to the British Columbia government. They have a rolling machine that they've recently made and is operational. The company itself has been operational for a number of years. And right in here.
Where's that traded? Says over the counter. Is over the counter in Canada.
Here, let's go.
Are they on the verge of bankruptcy or something?
No,
it's
they shouldn't
over
be.
the counter here in the U.S.
Yeah.
Or yeah.
Yeah, okay. That's what it says. So this oh, sorry, what did I do here?
Do they have a huge dramatic float? Have they been diluting?
Well, here, this all in here, this big sideways that was, oops, let's delete that. You kind of can see this old low here, right here, and this kind of flat line. This support in here, where the owner of the company was very, like, doing a public buy, like was doing a big stock buyback. So, and it was right after this area in here where the president was buying shares of the company, was when the rolling machine came out that they were constructing. So, you know, this company has been making and like growing and selling live plants to medical customers for many years, and they have these other products that they're working on, and they did that huge buyback themselves at 19 cents here. And
where's it trading now?
And it's 12. And then we can see that a fair, you know, down in here looks like a lot more buys than sells. So I think that the company itself has been around for a while. They obviously see some value in themselves to be buying back at these levels. And this is coming into that, what I would call a hopeful turnaround phase in revenue based on the things that we just talked about.
Is there a danger of a reverse split? Sometimes when stocks get that cheap, that, you know, institutions can't participate and stuff like that.
Yeah, I haven't looked into that far into the company. I haven't, you know, called them or gone by.
But that could kill an investor.
Yeah, exactly. But I mean, it's one of those things, do your own research. But I think, you know, based on the fact that they were selling products before and they got clearly caught up in the speculative phase, and that the company is still active buyers, that, you know, it's one of those things to take a look at.
You think it could revisit the highs?
I believe that would take legalization in America to do something like that.
Okay.
Because then everything would just, you know, catch fire again. So as I say,
that would be your most speculative buy of the four you showed us.
Yeah. So the first three were like, you know, big caps kind of thing that have a lot of money that are throwing their money around and buying other people. Yeah. So another one to take a look at. I've actually know somebody that works with this company. So I know that their ability to grow product and not kill the plant is good. Whereas we were seeing, let's go back over to here. It was, I believe, canopy growth in this area up in here. Even though the price was still going up, you know, they were having huge crop failures in their greenhouses. Whereas Saniva, I think, has a lot of potential. Now, recently, this gap down right here was their president resigning for personal reasons. It hasn't been disclosed yet, but it could be something to do with family. And they've also spun off a bunch of their Canadian properties. Now, I think what's going on with Saniva is that they are spinning off their Canadian side of things more and focusing on the American side, because now that there's product legal in Canada, there's more supply. Whereas in the States, I think, you know, from Trump legalized hemp a number of months ago. So I think that after he fired Jeff Sessions. So I think there's the possibility that legalizing cannabis kind of could be on the horizon. And if something like that actually happened, companies like Saniva that are focusing on their American production facilities, I think would produce a better fundamental than a company that is maybe only in Canada. And something that's interesting with this chart is
so you like this one better than THCBF?
Well, they're two different things. They're offering two different products. Like THCBF
It's a roller.
Yeah, and they're a seller of live plants, and they're the only licensed seller to the government of British Columbia. Okay. So that's, they have an official outlet kind of thing. Whereas these guys are dumping money into their American facilities, I think, for future growth. Okay. So this kind of pattern that we see has erupted 4 different times, and even to an extent here, and it came up to fill the gap here. Kind of, we'll take this breakdown level. So breakdown level in here washes it out, kind of breakdown level in here, that gets washed out. Big, huge gap washes it out. So I think with this gap, at some point, we're going to see that get washed out too. So I think that's, what's that, 40 cents? So, there's an opportunity there for people to, if the chart keeps playing out, that's going to, be almost a double your money kind of thing. So I think that's, taking a look at.
Interesting ideas.
Yeah. I think we talked about the Rand before. This is purely based on, what's happening politically in South Africa. Right before South Africa won the Rugby World Cup there a couple of weeks ago, South Africa was downgraded by Moody's. So that's not good either for the Rand. I think one could make an argument that if this finds a way to consolidate, that we could see kind of like a local, I think people would be screaming cup and handle there. Okay. And, you could make an argument for kind of like an inverse head and shoulders thing happening there too. Yeah. So I think it really depends on, like, this is definitely a political play, because what's shaping up there is almost like a Zimbabwe 2.0, in that the desire to take farmland from Caucasian farmers didn't work out in Zimbabwe, and that led to a lot of starvation and bad times for the country. And, that same sort of outlook is seeming to be manifesting in South Africa. And South Africa also had water problems, in Johannesburg in the last 2 seasons. So, pressure on water, which is going to put a pressure on agriculture, and then agriculture itself is seeing a problem because the government is getting involved. So I believe the Rand is under a lot of pressure. Yeah. Now, the interesting thing about this is that I started following the USD ZAR, the Rand, because of the political side of things. And then as this chart unfolded, I think the price was right in around here. Sorry, no, on this side here. I was looking at the chart and I thought to myself, I swear to God, I've seen this before. It seems like we just lived this, but in another market. And then, yes, we have. It was Bitcoin. So, on the grand scale, I'm just going to make some marks here. Oh, there we go. I actually already did a here. Bull market. Here's a much tighter defined triangle. This is messier, but you still have this cascade down. Yeah. Same as this cascade down, followed by this same type of recovery. Followed by the same type of recovery, which is 1, 2, 3 steps, shoop, and a blow off. 1, 2, 3 steps, whoop, and a blow off, which was consolidated here. Yeah. Consolidated here, and under this line of consolidation, this dip and run back up. So this consolidation, dip under it and back up, followed by a steep curve down, followed by a steep curve down. I definitely got a lot of flack for this back, when was it? Right in here, August. So I was on, I believe, your show in August and somebody else's show in August. And a lot of the comments, and I know there's some swearing on this show, were kind of like, you're a dumb idiot, fuck you, all that kind of stuff. You can't compare currency to Bitcoin. Yeah. You can't compare this to that. You can't blah, blah, blah. But the thing that we talked about before on the
And
last show,
they weren't aware of Ghost Day that you made us aware of.
yeah, exactly, is that psychology is just psychology. So and then we talked about,
doesn't matter what the title is on the chart.
Exactly. And then the thing that we left off the last program with was talking about, so psychology has never changed. And the markets back in the day, 100 years ago, kind of looked the same. And then over time, computers got involved, and now just straight up algorithms are involved. So, the humans are programming the algorithms, and the algorithms are looking at the charts and the old charts. So it's almost, even though it's the algorithms in play, the algorithms are just kind of confirming their input, and their input is our old models, and our old models are human psychology. So even though they're different markets, I think the algos are still,
reflective
of what the human psychology
behavior.
is.
Yeah,
exactly. So
okay.
I think that if we've been following this for half a year now, and if this continues to hold true, then Bitcoin should be
close to a low here.
Yeah, exactly. And if you look, where we are here, and we look over to the left side of the screen, you see a whole lot of sideways in here. All this, and these kind of levels of consolidation here. And then, on the way up, it consolidated under this level to try and make everyone think it was going down. So if this can bounce off of this, sweet, thick volume level here, then there's a very strong possibility that this huge, cycle that's had so much congruency continues. And I think that people should stay aware of that.
Nice look.
Yeah. Now,
nice
I'm going to take a couple quick, you mentioned Ghost Month. So that's a beautiful segue into the next chart. So down here, we had Festival of Lanterns, or Chinese New Year, which was
That's where I bought it.
Yeah.
High or low down there.
Yeah, which was also kind of like a proper breakout, technically speaking. And also, weird voodoo woo-woo, astrology speaking, also a break that confirmed a higher low. What did we have here? Here we have spring equinox.
That's where I got out and then watched it go parabolic without me.
Yeah, and then so here.
You ever do that? You make the tough money on the turn, you get out, and then you look at all the windfall?
Yeah, I tend to be an average in, average out kind of guy, so I don't get too stuck. So we talked about GAN before.
It's fun.
Yeah.
It's a lot of fun to watch a market explode to your targets without you, don't you think?
Yeah, it can kind of get annoying. So we had...
Trading's like golf, man.
Yeah, playing against yourself. So something that I talk about, is like astrology and things like that in markets. And if people don't want to believe it, that's totally fine. But the thing I throw out is this, very simply. It's okay to be a skeptic, but if multiple billion Asians believe in it, then even if it's fake, even if astrology is fake, they believe it so much that it's going to influence the market. So you should at least be, you as in the trader listening, should at least be aware to the main key pivots. So over here, Chinese New Year, bang. Here, spring equinox, and we know from GAN, equinox is important. Yeah. Here we have solstice, where the market turned down.
Yeah.
Here we have bang on the next, this is September, so equinox again. And the fact that it broke this, what people thought could be consolidation and up, it broke down decisively, like right on equinox. And again here, if we were to take, like, let's say we're looking at Mercury retrograde. We had sideways, a bounce, retrograde starts here, and it ends right here.
So is it the winter solstice could be the next point?
So the next two main points are, again, you're just lining up my charts here perfectly. The next main point is December 6th, 7th. And this tends to be important for altcoins. Now you can see here, it was a bottom here, this wick down. It did get washed out a tiny bit right at solstice here. And then again here, the 7th, bang, straight up. The 7th, there's this huge wick down and then consolidation into solstice and up. And here the same kind of thing is happening, you know, a break above, consolidation, line, a break above, consolidation, you know, slope, consolidation. So we're seeing consolidation after breakouts coming into December 7th. And I think this is a really important time for altcoin traders to be watching, you know, watching their setups.
Great presentation, man.
You betcha.
Again.
And for right now, you know, price is kind of sitting right at the fib. Is it gonna, you know, is it just washing it out? Because it seems like,
yeah,
you know, we're in a pretty defined channel right now. So this could just be, you know,
yeah, it
this
could
kind of
grind
like
lower
Mercury
another
retrograde
time.
washout kind of happening, and then we could follow some sideways and get back up into that that Rand pattern, which would I think kind of like do something like that. I believe if we were to go back to this, no, it was that one. Yeah. So we're looking for this move in here.
Right. Very intuitive trader, and your recognition of patterns between different instruments is really, you know, an edge that you have, and that you look for things like that. So, you know, another great interview,
Awesome.
DJ.
Yes, thank you. And yeah, thanks for having me. Hopefully everyone got a little bit of info out of there they can use, you know. So our, just to recap for everyone, we are looking at, you know, are we still stuck in a general risk on scenario? Did we just have a 1987 style event, or is it still looming? I think either way, it's not screaming horrific recession, you know. Gold has pulled back at a key level. And if Trump wants to not be an idiot and try and win an election, he's going to be wanting to do a trade deal, you know, somewhere in here, which is probably not going to want to make gold past that high. And if that's happening, then that means we are in risk on. And if we are in risk on, things that have gone speculative bubbles like cannabis stocks are interesting. And we're looking into the first half of 2020 to see increased revenues due to increased stores and increased products. Then we took a quick look at a couple of stocks that have been totally battered but do have properties and are operational. We took a look at you know, a currency that is in trouble due to the way its government is working, and we took a nice look at Bitcoin here and a fractal that's been following. And if so, we're really hoping to see a bottom soon. And finally, for the seriously crypto focused people, we're looking to see if altcoins can have a bounce. It would be seen as a spike low or a consolidation low, December 6th, 7th. And then after December 6th, 7th into December 21st to 26th, it could retrace or it could keep going higher. So there is movement in those areas where you gotta watch the chart. And then if that all plays out, then winter solstice to spring equinox would be the bullish section. So again, here, March, and where are we? March, and March again. So
okay, interesting.
Thanks for having me.
Let me ask you this to wrap it, Matt.
Yeah.
You have 20 grand. You're a high risk investor. How would you break that up between cannabis and crypto?
Oh yeah,
half and half.
Yeah, I would probably do a little more on the crypto side, because I think cannabis is going to be a lot slower moving. You know, stocks tend to, you know, like that's one of the things about crypto is it is so volatile, and the market cycles and the wave cycles play out much faster. So I think that the cannabis sector needs to see a little bit of consolidation. It needs to see that the increased stores and the increased products in Canada can affect revenue. And if it can't, then a lot of pressure is going to be put on the international markets and America coming online. So I wouldn't want to go, you know, that a lot of the cannabis stocks are kind of like speculative penny stocks in that sense. So I would take it slow and average in.
Average in, average.
I would also average in with that 20K.
Okay. All right. Don't use all your bullets at once. Never all in, never all out, but always with a very interesting view is Matt at DJ Thistles, where you could follow him. He also has a service where he talks about crypto. You want to show it?
Yeah, where people can just, get at me at the Twitter page here. And we also have the blog coinstreetnews.com. Need to do a little more there, but either way, Twitter is definitely the best way to get a hold of me if anyone ever has any questions. And yeah.
All right, knowing your background, what do you think of this, Matt? I'll wrap it with this.
Yeah.
On choosing the right instrument to trade, and I'm sure you get those questions all the time. Should I trade crypto? Should I trade FX or futures? All right, I say this, that just like music, it's not the instrument, but the musician playing it.
Yeah, I definitely agree because there's a couple old sayings. There's more than one way to skin a cat. There's more than one path to enlightenment. My experience from music and trading and being a parent is that there's more than one right way to do something, but the wrong ways are always wrong. So I think it's important to learn from people that have more experience than oneself to learn what's wrong. But don't ever hold on to the opinions of, self-proclaimed gurus as the only one right way to do things, because some people will look at an indicator or an oscillator and be like, that's crap. And another person will look at it and see Valhalla and they can see what's going to happen in the market. I can look at patterns and fractals and pull out random things and it follows that for 2 years and it's easy for me to trade. Whereas other people might look at those things and see no correlation whatsoever. So, to each their own, and we all have different ways to see the market. So
yeah, and it's never the instrument. It's never FX is bad, or because we talked about it. You could change the title of whatever your chart you're looking at, and you would trade it the same way.
Exactly. Yeah, I think the only real difference would be is the leverage trader, because if you're going down with higher leverage on smaller time frames, then I think you're going to see a lot of people get washed out with those wicks that go in both directions in 1 hour, right? Crypto didn't really do that a few years ago. Let's say 3 or 4 years ago, a breakout was a breakout, and you just rode it, right? Whereas now, crypto is seeing those same kind of false breakouts all the time. So people, have to adjust their risk based on their time frame more.
Okay. Well, thank you, Matt.
Cool.
I don't know when you guys celebrate Thanksgiving, but happy Thanksgiving. Okay. So that was Matt, everyone, and we'll see everyone tomorrow. I don't know what happened, but he's gone. So everyone have a great day, and I think we have a shortened session tomorrow. So daily golfing, Okay. Remember, don't just count your pips, count your blessings. See you guys tomorrow. You're welcome, guys.